Moving on with the second part of our fundamental mini educational series, interest rates and their importance. And on the first part, I showed you a classical example of what happened in Europe with the Eurozone when the central bank or the European Central Bank came and cut the interest rates after the CPI was clearly lower than expectations. We had there, if you go on the first part of this project, we had there the CPI basically coming at 0.7% on expectations of 1.1, and that was enough for the central bank to come and cut the interest rates. Now they did cut in Europe for 0.25 basis points. The second example I would like to show you is coming out of Australia, because this week, not this week, I think last week, sorry, what we had was here the CPI in Australia. Now the CPI in Australia came, and let me write the values on the screen. So the CPI in Australia came at previous was 0.8%, forecast 0.8%, but the actual that was released was 0.6%. Now usually when this inflation numbers or the CPI, when they are being released, usually they are coming almost in line with the forecast. Whenever something is happening that the markets are moving, and they are moving quite fast. Now take a look what happened with the Australian dollar, US dollar, by the moment that the CPI has been released here. This is a 4-hour candle. So lower values on inflation, lower values of CPI provide the chances or provide the probability that the central bank is going to come and cut the interest rates. Now Reserve Bank of Australia is going to come next week, at the beginning of next week on Tuesday, and expectations, I would say, that are growing for them to come and cut the interest rates. Even if they are not cutting the interest rates, the rate statement to follow the interest rate decision might be dovish or bearish. So the safest place to be was, after this release, to look for places to buy put options. So to look for places to buy put options. I would say that that is going to be quite interesting for the pair, and what the Reserve Bank of Australia is going to come. Now the interest rates in Australia is 2.5%. It is below the interest rate in New Zealand, but I would say that they still have enough room for a cut. Keep in mind, the central bank mandate is to keep inflation below or close to 2%. Now take a look what the previous is, 0.8, the forecast 0.8, and the actual 0.6. Now this threat is a deflationary threat from my point of view, and this deflationary threat can only spell trouble for the Aussie, because the central bank will come and will try to step in. What does it mean, deflationary step? It means that market is actually going to position for the consumer not to spend that much. Well, if the consumer is not spending, that is the whole engine or the vital thing that makes the economy moving. Without consumer spending, that there are no jobs to be created. The inventories are rising when you are postponing the purchasing decision. So I would say that after such a release, the logical thing to do is only to go in the market and to find places to go and buy put options. Either you are looking for a possible head and shoulder like it is this one, or you are looking for something else. The thing is, this is bearish price action, and I would say that it will continue by the time the Reserve Bank of Australia is to come next week. It remains to be seen. This is the end of this interest rate and decisions and their importance on the currency markets. If you trade binary options based on the currency pairs, like, because these are the most popular financial instruments, then you should be aware that this is going to happen, and when they are going to happen and what it means. Thank you again. Please go and check fairbinaryoptions.com. Check our Binary Options Academy projects, and you'll see a lot of useful information there. I can guarantee you that. Bye bye.